Hey, bulls and bears, the stock market is going crazy and ignoring World War III. Hey, everybody, you're watching Bull, Boom, Bear Bust. My name is JJ, back with another dose of economic reality. I'm sorry that I missed you all yesterday. I was trying to get some technical issues resolved. We'll talk about that later. Well, let's get right into it here. We talked about this just maybe a week ago, maybe a week and a half ago, about how we may see a major rally in the stock market and a short squeeze before what I think is ultimately going to be a very big drop in the stock market. Why do I think that? Well, we have escalating conflicts happening with U.S. involvement getting much more intense here, and what's happening overseas. Let's talk about that first, then we'll get into the markets. The U.S. actually actively involved now, not just from a non-combative role like we were told. Remember, first, we weren't going to get involved. It was just financial backing. And then it was going to be, oh, we're sending troops over there for non-combative roles, just support roles. Now we have U.S. strikes, several actually U.S. strikes here, conducting airstrikes against Iran-backed groups in Syria. And I told you here, this is just going to escalate. It's just going to escalate. And many people are already calling this the beginning of World War III. And I hope I'm wrong. I don't like to come here and have to give people the heads up or what I think about this or my prediction on this, but I think it's going to get much worse. And I hope I'm wrong. If I'm wrong, please let me know what's going to stop this. And maybe this will blow over in a couple weeks, few months, but I don't think so. I don't think so. But look at what's happening with the stock market, folks. The stock market up, Dow Jones up almost 500 points, the NASDAQ up, all indices in the green today. Russell 2000 up over 5.4%. Markets ignoring World War III. So what's happening? Well, first of all, I think most of you know there's a complete detachment, the stock market versus Main Street, and we're talking about the Main Street economy, how most people are doing, U.S. consumers, versus how the stock market's doing. And take a look at this. Here's just one example of how the stock market can be pushed up here. There's a company called WeWork. They went bankrupt. But here is the story I want you to get out of this WeWork situation. The CEO of WeWork, bankrupt company, net worth $1.7 billion, billion with a B. Adam Newman, $1.7 billion. A lot of stock buybacks, and that's just one example of a company. Stock buybacks wherever you look. So you could basically be a failure as a CEO and still skate out of there as a billionaire. Now, the resources that I have pulled up don't say what Adam Newman's net worth was before taking over and being the CEO of WeWork. But you can see that there's not much personal risk in running a company. You're going to get a big pay package, first of all, that includes stocks. So, of course, companies are going to buy back their own stock. You see what I'm saying here? So, the interest lies in pumping up their stock instead of reinvesting into the company, instead of giving bigger salaries to their workers. You see what I mean here? So it's all about the greed at the top. And, that's one of the things that's driving the stock market. Of course, you have lots of other things as well. You have institutional investors. You have, I think, a short squeeze happening right now. But as the war escalates, I think ultimately the market's going to have to react, because we're going to see the U.S. get involved here in ways that I don't think anyone can imagine. It's coming here to the U.S., the USA. It's going to happen on the soil here in the USA. I think that's what's going to bring the markets down. It's going to take something big. Look at 2020. The markets went down because of the health crisis. I think this is going to be the next big thing that brings the markets down again. I hope I'm wrong. I hope it doesn't happen as I'm laying out here to all of you. But look at what we've been right about here so far. Remember, in 2019, we said something big is going to happen and bring the markets down. Look what happened in 2020. Now I'm telling you something big is going to happen to bring the market down. And I think this is going to happen late 2023, maybe sometime in early 2024, maybe the middle of 2024. But definitely, we're not getting out of 2024 without a major systemic collapse, in my opinion. All right. I've got my crystal ball back here. I could get it out like I did a few reports ago, but I'm going to give that one a rest here because I've got a few other things I want to get into on this report here for you. Now, we have the October inflation numbers, what's known as the CPI, which most people consider inflation. When you look at the cost of living, we look at the CPI, which isn't a very good gauge on the cost of living and what most people have to pay right now. But it is the official number that most people talk about, that the news puts out there. So we're at 3.2%. That's actually down from September. This is the October number, 3.2%. September was 3.4%. So that was enough to send markets rallying on the optimism that because inflation has decreased, that there may be no more rate hikes. But keep in mind, we haven't hit the 2% inflation target yet. So why are there going to be no more rate hikes when the central bank hasn't hit their target, their inflation target, right? Doesn't make any sense, does it? So the market, I think, is being overly optimistic. And again, I think a lot of this is a short squeeze before the big drop as this war, this global situation, this global conflict expands. Well, it hasn't turned into a global conflict yet, but I think it will. And U.S. involvement, all right? So that's what's happening there. Again, the price is going up 3.2%. Not a good sign. It means cost of living is going higher, right? We need deflation, not more inflation, even though it's less inflation year over year versus the prior month, because in September we had a 3.4% year over year inflation number, CPI number, but still not a positive thing. The markets are putting it out there or portraying it as a positive thing because they're winning the war on inflation, but they're really not, right? So take what you will with that information and, invest accordingly. But let's talk about this. We've got 40,000 veterans, and we're going to shift over to real estate here. 40,000 veterans potentially are going to get their homes foreclosed on. This is not fun to have to report, but I feel like if I don't talk about it or more people don't talk about it, then nothing will ever get done about this, right? I hope this doesn't happen. There's a recent article out here, and this is out of NPR, but it was widely reported. These veterans were put on an assistance program where their mortgage payments were supposed to be added to the end of their loan. In other words, they were going to extend the term of the loan without having a big balloon payment due after the period where they skipped their payments. Well, that's not what happened. In fact, there's already 6,000 vets in the foreclosure process right now. And this is per NPR, and it could be a lot worse. There's another 34,000. Let me just read it right from here. According to data firm ICE Mortgage Technology, 6,000 homeowners with VA loans from the health crisis that had forbearances are currently in foreclosure. That's 6,000 right now. And another 34,000 are delinquent. So we could be looking at potentially 40,000 foreclosed veterans unless something is done here. Quote, service members are in a position where they're going to lose their home. And for most people, that's everything they work for, and all of their wealth is in their home, unquote. This was supposed to be something that was supposed to help these people, but now they have to pay this huge lump sum. They can't do it. So where's the aid to the people that really need it here? Why are we sending all this money across the world for, things that probably we shouldn't even be involved in? Now, that's the question of the year there. Should we be involved? Should we not? Some people say if we don't get involved, it's going to expand, and the U.S. is even more danger. Other people say every dollar we send somewhere else is a complete waste of money, right? So that's a whole different issue, whole different topic that has to do with geopolitics and, military and things like that. But to look at what's happening here in the U.S., this many veterans potentially getting foreclosed, right? Absolute insanity, if you ask me. Now, one more thing I want to get into. This is this prediction out of UBS. UBS is saying rate cuts are going to happen in early 2024. Here's the thing. Rate cuts, for that to happen, it would have to be something really bad that occurred in order to justify rate cuts, in my opinion, because the cost of living is not coming down. They're saying inflation is slowing, yes, but most people aren't feeling better about what's happening. If you look at the survey, the consumer confidence survey, it's in the toilet, right? So yes, UBS 2024 recession means Fed will bring in huge interest rate cuts. They're talking about a 275 basis point rate cut in early 2024. And so that's nearly a 3% shave off of the funds rate. All right. So UPS predicting this. I don't see this market and this economy lasting much more than a few more months. I'd say 5 months maximum. March 2024 is my timeline. Something I think big is going to happen before then. But then again, hey, my crystal ball may be foggy. Maybe you have a better timeline down below. What's going to happen? Or is it just going to be nonstop bull market where we see home prices go back up, we see the stock market go back up, car prices are going to start going back up because everybody's so rich, right? Well, no, all-time high debt levels, folks. Delinquencies are increasing. The consumer doesn't have much more left. And of course, they're going to tell us about how the holiday spending broke records and everybody's traveling, record travel. Of course, we're going to hear that, right? It just means that people are getting further into debt. Not everybody, but most people. All right. So if you're one of the few paying off your credit card in full each month, if you're saving money and accumulating more wealth versus getting further into debt, you're amongst the very small percentage of the population. From what I've seen, it's less than 20% of people and families are able to do that right now with this cost of living crisis. All right, everybody. Hope you guys like this update. Please let me know what you think down in comments, and we'll be back with more reports. And we hope you like and subscribe to give this video a little bit of traction. That would be excellent. Thanks, everybody, for being here. Talk to you later. Bye.